and welcome to this another episode of ECCB Connects. Remember, ECCB Connects is produced by the Eastern Caribbean Central Bank to help you understand who we are, what we do, and how we serve you. Today we're going to look at bank resolution, and we have with us Deputy Governor of the Central Bank, Mr. Trevor Brathwaite, to explain the process. Deputy Governor, welcome to ECCB Connects.
Thank you, Sean, and thanks for inviting me to be your guest on ECCB Connects this time around.
November last year, the ECCB announced that the ABI Bank had ceased to conduct banking business in Antigua and Barbuda. And last Friday, April 22nd, the ECCB again announced that the two national banks in Anguilla have ceased to conduct banking business. What gives the ECCB the authority to shut down the operations of commercial banks?
Okay, so the authority is contained within the provisions of the ECCB agreement. The agreement in Article 5 indicates and gives certain criteria for the central bank to intervene in a commercial bank, a licensed commercial bank, to make sure that customers' deposits and creditors' rights are preserved. Now, we would do the necessary work prior to intervention, on-site visit, discussions with the Board of Directors, reporting to the Monetary Council on the condition of the financial institution. And once it has been determined that the financial institution cannot meet its obligations to its depositors and its creditors, that these are under threat, and that the commercial bank is delaying payments to its creditors because it may have been insolvent or there's a insufficiency of liquidity. And generally, if there's a governance issue with respect to that entity, then these are all good criteria for examining whether or not the central bank should intervene. So in the process of this pre-examination, if you will, we will make the necessary reports to the Monetary Council, and then the Monetary Council in its deliberate judgment will give the authorization for the central bank to intervene. So in the case that you spoke about, in the case of ABI Bank, that process started in July of 3 years before November last year. And we then proceeded to resolve the institution on November 27th, and then the two banks in Anguilla on the 22nd of April, as you indicated. But prior to that, the central bank also had cause to intervene in another bank in Antigua and Barbuda, and that was the demise of the Bank of Antigua following the Stanford arrest. That caused a run on the bank, and therefore the bank became insolvent because there's no bank that has all its resources available to meet depositors' demands. So when the Bank of Antigua had reached a point where it could not meet the demands of its depositors who wanted to withdraw their funds, then it became insolvent, and then it became necessary for us to intervene to make sure that the bank can continue in the future in some form or the other to service its clients and to pay its creditors.
After the central bank has intervened, a commercial bank, what steps are then taken to return that bank into the hands of its own management team?
Okay, so the central bank then on intervention, its primary focus will be to the continuance of normal banking business, and that has been the approach that we have used.
And when you say normal banking business, what
meaning that customers can come in to the bank, withdraw funds to some extent, conduct banking business by depositing funds. The customers can get loans to some extent, but it depends on the liquidity of the institution, and do international transactions, purchase drafts. Businesses conduct their normal commercial businesses by paying for imports and the like. So that's basically what we want to do first off, to have a modicum of good banking business and so that customers can remain confident that they can go into their institution that they were accustomed to and conduct their normal banking business, both private individuals, households, and commercial entities that are clients of that particular institution. So the intention is to do that first of all, and then the central bank then, according to the agreement, will be looking for prospective purchasers of that bank that has been intervened or transitioning to another institution. So for example, in the Bank of Antigua situation, the ECCB, as we know it today, the Eastern Caribbean Amalgamated Bank, was created, and that bank then has shareholding from several banks in the region as well as the government of Antigua and Barbuda. And so what we call the good assets and good liabilities of the Bank of Antigua, because even though the bank has been intervened, there are people who are still paying their loans. There are depositors with the funds on account. So we term those as good deposits and good loans. So these good assets and liabilities were transferred to Eastern Caribbean Amalgamated Bank, which was sufficiently capitalized by shareholders and is today conducting business today and is one of the strongest banks in our region. With the case of ABI in November, ECCB again was used as the acquiring bank for good assets and liabilities of ABI. This time we did it slightly different because the mandate for the Monetary Council gave to the central bank is that they would like all depositors to be protected. So ECCB, depending on its capital needs, was not able to acquire all the deposits of ABI. So as a transitionary measure, a certain threshold of deposits were transferred to ECCB, and the remainder above that threshold was placed in a deposit protection trust. And in the deposit protection trust, the government then stepped in, funded that deposit protection trust. The deposits are in that deposit protection trust, and over a period of 10 years will be paid back to the depositors. So in that way, all depositors will get back their funds, but albeit over an extended period of time.
So they have not lost any money.
So they have not lost any money. As a matter of fact, the deposits in the deposit protection trust will be paid interest. So depositors will get back their principal plus interest over that period of time. So the idea is to pay depositors 1/10 of their deposits every year for the next 10 years at an interest rate of 2%, and then at the end of 10 years, all depositors will get back their deposits plus interest. The same process was used in Anguilla. The same idea in terms of setting up a deposit protection trust, which the government of Anguilla funded by legislation, and that the same thing will happen in Anguilla over time.
Deputy Governor, over the past 7 or so years, the central bank has intervened into 4 banks in the region. What is the status of the banks in the Eastern Caribbean Currency Union? Do citizens have reasons to be concerned?
Okay, so one of the mandates of the central bank is that it needs to preserve financial stability. That is one of our charter mandates. So the central bank is very concerned that citizens could get good banking services in the region and will continue to do so in the foreseeable future. So our mandate then is to make sure that we act as protectors of the financial system, both in the general case of the commercial banks who are licensed to conduct banking business, as well as the other non-bank financial institutions like credit unions and the like. And that is our wide mandate in terms of financial stability. But when it comes to commercial banks, who we have direct responsibility for, our mandate then is to make sure that these banks are operated on a sound basis, to make sure that there's good governance in these institutions, that depositors' funds are protected, that creditors are able to get repaid, and that there's general good banking business can be conducted within our region. Of course, since the onslaught of the financial crisis, most of our indigenous banks and international banks went through a little crisis position. One of the things that we saw was non-performing loans increased because economic activity decreased. So if economic activity decreased, it means that people will have a difficulty in repaying their loans, and therefore there will be a spike in non-performing loan performance. So what we've seen then as the crisis is abating is that the level of non-performing loans are actually coming down. That means, therefore, that banks are paying keen attention to make sure that they operate with a modicum of sensibility, and also that they can preserve their existence through this crisis period and into the foreseeable future. So the central bank is very, very concerned about maintaining the maintenance of financial stability and good and sound banking practices.
So let's say my grandmother who has her life savings at a bank, she has no reason to fear?
She has no reason to fear, because the central bank's purpose is to ensure that your grandmother can get into the bank and withdraw her funds to meet her daily needs.
Deputy Governor, thank you very much for speaking with us on ECCB Connects.
Thank you very much, Shamala.
You're watching ECCB Connects, protecting our currency, developing our region. And now for this week's financial tip.
The only practical way to take control of your spending and to make sure you are using your money wisely is to budget. So, create a budget that will guide as to how you spend your weekly or monthly income. And then stick to it.
To view any episode of ECCB Connects, anytime, any place, at your convenience, check out our YouTube channel, ECCB Connects.
We have come to the end of this week's episode of ECCB Connects. If you have a question or topic you'd like us to discuss, send us an email to the address at the bottom of your screen. Thank you for watching, and see you next time.